The biggest public works projects in the history of the world is going on right now. It has nothing to do with the Fed or the US at all. It's China. They went from a tightly controlled system to verbally expressing their desire to open up. Sounds good, right? But why are they building millions of empty homes in China? Why are they willing to tolerate millions of empty homes, bailing out businesses and literally buying shares of the Chinese stock market? Could it be that a massive deflation is underway, which entirely coincides with what's happening in the United States? You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening inside of China. I also want to touch on Japan. What you're seeing here today is not just China, of course. This is happening all across the world. However, the public works projects that are happening in China today are bigger than any country and in any other time we have seen to date. This is very important to follow what China is doing, what they're willing to admit, and you can track the progress of it and see how it all plays out. The Chinese stock market is down, last I checked, approximately 24%. The trade issues going on with the United States are making things worse, and they're feeling more and more pressure. China is intervening in the stock market, they're intervening in real estate on many levels, and all other elements of the economy. So we're going to get into some details today, and I wanted to begin with this. It's something that I covered not too long ago, but a fifth of China's homes are empty. That's 50 million apartments. Very important to show the details just to reiterate what has happened here. And this is not a joke. This is not something that they hide. It is publicly available information that 50 million houses are empty. China's home vacancy rate overshadows other major economies. You're looking at 22% vacancy rate. That is undeniably extremely high. Compared to the United States, which stands at approximately, I would say, 12%, that is extremely high as well. But we're looking at this right now in China with the government basically coming in and suggesting that they will support the economy, they will support the markets, they'll do whatever it takes. Through the roof, outstanding personal mortgage debt. We are told time and time again that things are different in China than they are in the United States, different in the UK, different in Canada, and so on. However, there is a trend, and that is people are using more and more debt today than they did 10 years ago, more than they did 20 years ago, and so on. You're looking at 2.98 trillion yuan. And today, in 2018, the numbers come as of September 2018, but it's 25 trillion. So that is a big jump in a 10-year period. This is important to note because what's happening with debt continues to get worse as time goes on. And the more debt there is, the more derivatives there are, the more intertwined the financial systems become. You have the global systemically important banks. They are all connected together, and right now they are far into a bear market. I believe they're approximately about 50% down from their peak. Banks like Deutsche Bank is suffering dramatically here as you see the fall further and further into the ground. You're seeing problems in China, you're seeing problems in other parts of Asia as well. So the contagion is all over the place, from Europe to Asia to the Americas and so on. There's a lot in this article. I'll cover it as quick as I can. Essentially, we have this property not for living, it's for speculation. Regulations would vary from city to city. Over the past 2 decades, property has proved to be one of the best investments in China, despite constant government intervention. From purchase restrictions and sales limits to mortgage loan constraints, the average price has soared. It's as expensive as London and Tokyo in cities like Beijing and Shanghai. So this is important to note that the prices have gone up quite a bit, even though there have been some restrictions. However, I think those restrictions are real minuscule in comparison to what we have going on today. However, there there has also been increasing concern that a downturn in the housing market would hit households, banks, and developers hard, and this in turn would be a serious threat to China's state banks and local governments whose revenues are tied to the property market. China is really feeling it today on all levels. The financial system, you're seeing it in the manufacturing today and other parts of the economy that are not really able to keep up with the unfortunate decline that has been experienced. This is a series of charts. I think they're very important, so I'm going to zoom in quickly and show you what they're all about. Bailing out builders. For the past 3 years, smaller cities in China have borrowed to take empty homes off the developers' hands. In this particular city, Bangbu, the result has been a property boom that now exceeds China's benchmark 70-city average, and even megacities like Beijing. That's how serious things have become when the government intervenes and makes everything a mess. So you're seeing right here, local government debt, China Development Bank loans for the program since 2012, which is basically non-existent at that point, up until today. You're seeing that increase dramatically. Housing units, look at this here, government built and government bought or subsidized has been something that was really not a factor back in 2012, and now it is quite significant. You're seeing millions of homes being purchased, being subsidized, being built by the government. Home price, you'll see the different cities here, just showing you that the prices have really come up in this particular city. That's the blue line, where it has gone even further beyond Beijing in terms of the monthly change. So that's important to note what we're seeing, the intervention and how it affects that particular market. China's manufacturing and private firms will get more support, says the economic planning chief. You're talking about massive intervention here, the likes of which we have never seen before. The manufacturing sector is getting a boost from the government. And why? Because everything is totally fine? Of course not. They're getting it because they desperately need it. Private firms as well. You're seeing financial institutions. You're seeing companies getting it through the stock market. The national team has been injecting their capital in there. There have been many levels here, and it's important to look at it and really judge it for what it is. This is a bailout that's taking place on many levels. China's government used to build homes for families who lost theirs to development or decay, but last year local governments from this particular city spent more than $100 billion to buy housing from developers or subsidize purchases. They are directly intervening in the markets in order to ensure that everything stays steady and stable, and they're doing so on a massive scale. They're not just doing it in one city because of a particular issue. This is a widespread public works project that is going on right now. Underpinning the strategy is a cycle of debt. Cities borrow from state banks for purchases and subsidies, then sell more land to developers to repay the loans. As developers build more housing, they too accrue more debt, setting up the state to bail them out again. The burden on the state rises, as does the risk of collapse. This is a huge mistake. If something isn't getting done in this regard, maybe it shouldn't. That's what has to happen sometimes. You have to have failures. You have to have struggles. Although they're painful, although they're not very nice, they allow reality to be restored and the market to be restored, at least to some degree. But that doesn't happen here. It is quite unfortunate. The government has tried other ways of filling apartments, such as offering cash subsidies to encourage rural migrants to buy in urban areas, but the program is in the first large-scale case of the government becoming a home buyer itself. Incredible. It's delusional as far as I'm concerned, and this is a very big mistake. They're going to regret what they're doing in the long term. This is a surprising change of events. However, I'm going to make a point about this. The national team net sold 104 billion renminbi of A shares in the third quarter of 2018. So they have been buying shares of different companies. However, now that's changing. They have purchased less and less of the shares, and this is coming at a time when the market really needs it. We're looking at the Chinese stock market in a bear market today all throughout 2018 for the most part, and this has come at a time when other markets around the world are also suffering. So you may ask the question, why in the world would they do this? Why wouldn't they print more money, buy more shares, and get this done with, get the deflation over with, at least bring it to a more marginal reduction in the stock market instead of suffering at such a great degree? I believe this is all part of the quantitative tightening cycle that is taking place in concert from all central banks around the world. They're doing it at different rates. Each one has their own interest rate that they're setting today. The amount of money that they've printed previously was different. The amount that they're currently printing is different, and who knows what it'll look like in a year. But there is a complete and total coordination between all of the central banks to begin a tightening cycle that started back around the beginning of 2018, and it continues right now. We're in December, just about to finish the year off. It has been happening the whole year. Over $1 trillion has been pulled out of the system from the central banks, and this has caused a huge issue for the stock markets globally. Another country that has begun this is Japan. So let's flip over to that before we end the video off. Japan finally concedes its crazy low prices can't be beat. Out of the Wall Street Journal, they get into the details, but essentially they're suggesting maybe it's time that we stop what we're doing. This is public information now. However, you can see that they were engaging in some level of quantitative tightening for the last few months. They have been doing so, not making it public at all. They were just printing less and less money. Sure, they were still holding on to massive amounts of shares, of the ETFs, of the bonds, of everything essentially, and they still do, probably still will for a long time, but the amount of money that they're printing had been reduced over and over again. I've been bringing that to you. You've been following it with me. I know that. But essentially what we have here is more connection to what's happening to the other central banks. They're printing less. They're starting to wean off their balance sheets. They're increasing interest rates at a time that things are getting worse. So if you're paying close attention, you might think these individuals, they're making a huge mistake. They're causing this problem to be exacerbated. Maybe they're causing the problem in the first place. It's their fault. It's their fault. They're the reason. And then you have the trade issues. You got all these things piling up. However, if you just take a step back, zoom out, and start to analyze exactly what's happening, as far as I'm concerned, this is all intentional. But that's a little too deep for some people. So let's move on to the last one here, just showing you the fact that right now we have seen the Asian markets taking a nosedive. The Japanese stock market fell by a very unusual 5% in one trading session. That was 1,000 points. It's hitting them hard. It's hitting other governments as well, where you can see all of these different countries within Europe and Asia and the Americas as well getting hit harder and harder from October up until the end of 2018. It doesn't seem to stop, so let's see where it goes. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have it all. You can actually flip through them. All you need to do is go to the link in the description. It will take you over to Amazon. You can flip through the pages of these books. If you like them, that's all. And if you want the audiobook version, you can get that at themoneygps.com.